The last lesson in Chapter 15 is how to calculate the federal income tax. This lesson may need to be broken down into a two-part video due to its length. First step is, of course, we're going to post all the adjusting entries that we've already journalized. Then we're going to adjust for our federal income tax payable, and then we're going to prepare a new adjusted trial balance to include the federal income tax. So first off, here's all the adjusting entries we've done. So we've done the uncollectible, the income summary, and then we've closed off our expenses. And we've done our depreciation expense on our office equipment and our store equipment. So this is pretty much gearing us towards the end of the year fiscal. What we do is we individually post each adjusting entry, the debit and the credit to each account, and then we go back and do the post reference. We've done this many times. This is nothing new. Calculating the income before federal income taxes. So on the trial balance prepared after adjusting entries, we've posted everything. So this is going to create a new adjusted trial balance. It's going to show adjusted entries. So what we're going to have to do is enter all the titles of the general ledger account, enter the account balances, except for federal income tax expense. We'll calculate the total account balances on the income statement for the credits, and we'll calculate the total for the debits. After you calculate the total account balances of the debit and credit side, we're going to subtract. So we'll subtract our debits and credit totals, and that's going to calculate the net income before we actually have our income taxes. So to continue in the calculation process, different tax rates are applied to different levels of net income. That happens in personal taxes as well as corporate taxes. So each tax rate and each taxable income is in brackets. So it's actually chunked based on the quantity or the dollar amount. So what we're going to do is we're going to figure out our tax bracket, and then that tax rate that's associated with that bracket is going to give us our marginal tax rate, or our percent that we are obligated to pay. So here's an example of the tax rate schedule. So first bracket is from 0 to 50,000 with a tax margin of 15%. Then it jumps from 50 to 75, and you account for the first 7,500, and then it's a 25%. And then it jumps from the next one of 75 to 100,000, where you account for the first 13,750, and then it's a 34%. And then the next bracket and the next bracket. So the one that it looks like we'll be using the most for this section is going to be the bracket between 100,000 and 335,000. So that 22,250 is already the calculated tax bracket from the 3 previous tax brackets. So the additional amount, that 39%, is what we're going to use to calculate. So when we go to actually do our journal entry, the two accounts that we'll be using will be federal income tax expense, and its contra account will be federal income tax payable. Keep in mind that we have been paying quarterly taxes all this time. So when we go to make this entry, we also have to take into account what we've already paid in Q1, Q2, and Q3, since we are calculating at the end of the year Q4. So again, there are 3 quarterly payments that we've already made. So we're trying to figure out what that 4th payment would look like. So we will need to look up how much have we already paid. Then we go into the adjusted trial balance. It's already got all the adjustments and closing entries, and we're going to update. So we're going to update what we've already paid in federal income taxes to include the 4th quarter. And then of course we're going to have to redo all the totals. So how does the trial balance serve as a checklist for preparing adjusting entries? Basically, a business can examine each account to determine if an account needs adjusting. In what order can adjusting entries be journalized? By the order the accounts appear in the trial balance, beginning with assets or revenue. Which accounts are totaled to determine net income before federal income taxes? All income statement debit accounts, which will exclude federal income tax expense, and then all income statement credit accounts. What is the bracket maximum tax and marginal tax rate for 25%? So the bracket min is going to be $7,500, and then that marginal tax rate is going to be 25. Don't worry, guys, you do not need to memorize this. You will have access to the book for all assignments and tests. So this is going to conclude part 1 of the video, and then we're going to go ahead and get into our assignment with part 2.